Happy Friday, guys. It's a late one this week. I apologise. I've actually had most of the week off sick. I haven't been feeling well. So if you've been trying to get me at the office and I haven't been there, I've been home doing not much at all. This week, we're going to talk about income protection. So I haven't been at work because I've been sick. If that was for an extended period of time, it might be that I'm able to claim on an income protection policy. So I shall explain it all to you tonight and how it works and what it's about. And you'll be a whole lot wiser on the topic tomorrow. So income protection, we spoke about trauma insurance a couple of weeks ago, income protection tonight. What is income protection? Basically, income protection is the ability to replace your income should you be unable to work due to accident or illness. We refer to it as basically insuring the goose, not just insuring the eggs. So most people will definitely insure their house and they'll insure their car and their motorbike and their boat. But the percentage of people who actually insure their life or their income, which can be a significant asset. You imagine if you're 40 years old and you're at 100 grand a year and you've got 25 more years, that's $2.5 million worth of income that you're not going to get if you were unable to work for an extended period of time. So we're saying insure the goose. Yeah, definitely go insure all the eggs, the cars, the houses, the boats, the bikes, but you need to make sure you insure yourself and your ability to earn income. So that's the intention of income protection insurance. Basically, as I said, it will provide you with income if you are unable to work due to illness or injury. Generally, policies pay 75% of your income, but when you add, super and things like that into the policy, then you're looking up at about 80% of your income. Some of the finer details that you need to know about. Basically, when you take out income protection insurance, you need to determine after a waiting period, after how long will you be paid and for how long will you be paid. Now, the wait period, a common wait period is 30 days. So you'll be paid after 30 days. Something to consider. If you have significant money, cash savings, if you have long service leave or if you have sick leave, of a significant amount, you can use all that before you start being paid income protection, because a longer wait period is going to result in your cover being cheaper. So if you had a 90-day wait as opposed to a 30-day wait, it's going to be about 30% less. So if you can use savings, if you can use sick leave, holiday pay, long service leave, consider a longer wait because it's going to be cheaper than a shorter wait. The other side of it, so we've now worked out we need a certain amount, of period that we can wait before we receive the income if we cannot work due to illness or injury. For how long will you need it? So a common one is 30 days till age 65. So a 30-day wait and payable to age 65. So your benefit period, as was with the waiting period, the longer that you can wait, the cheaper your cover will be. It's the opposite. The longer that your cover can last, the more expensive it's going to be. So if you had like a 2-year wait, a 2-year period, it means that if you can't work due to accident or illness, they'll only pay you for 2 years. That's a cheaper policy than if you were having it till age 65. So some things for you to be mindful of. A couple of statistics. Most common reason for men on income protection: accident or injury, 25%. For ladies, accident or injury is 10%. What's that tell you about us stupid blokes? Back to men: problems with bones and joints, mental issues, cancer, everything else. Ladies, the same illnesses, the same diagnoses, but just different percentages. So how do you pay for your income protection? Well, your income protection, if you receive a payment on your income protection, it's taxable income. The premium is a tax deduction. If you pay for it personally, you get a tax deduction at your marginal rate, which potentially is, any of these numbers here. So it's a whole lot higher than the superannuation rate of 15%. But if you have to pay for it through super, you can pay for it through super. We'd rather that you have it than not, because you can't afford it personally. Then super is an option. So that, guys, is income protection. Apologies, it's late. Like I said, I haven't been feeling well. Apologies if I'm a bit scattered tonight, but I wanted to get it done. It's done. We're there. Have a great weekend. If you've got a policy, any insurance, we should have a look at it, because generally, well, not generally, but the possibility is that we can, match or beat things that you have. Want to make sure what you've got is in your best interest. So I'll leave it there. Have a great weekend, and we'll chat soon.